Hi everybody, this is Tim Melvin of Banking on Profits coming to you from down here on a very nice, hot, muggy day in Central Florida. That's kind of the way I prefer it. No more shoveling snow for this guy. Been down here in Florida over 5 years now, and sincerely doubt that I will ever reside anywhere else in the United States or elsewhere. Absolutely love it down here. Anyway, I just got done sending out my reading list to subscribers for Banking on Profits and the Community Bank Stock Investor, our monthly publication. They still get the reading list every week. And on it, we included a couple of what I thought were important podcasts or interviews or whatever you want to call them. The first one was with Edward Altman. He, of course, is with the Stern School of Business at NYU and is the inventor, basically, of the Altman Z ratio that we still use today to evaluate the financial strength and likelihood of financial distress of a particular company. I use it in my regular practice on non-financial stocks, and I can tell you it is a great way to stay out of serious trouble when you're picking stocks. It really reflects strength in the balance sheet. He's one of the leading credit analysts and credit observers in the United States. And if you've never been to his webpage and read all the research on credit and credit conditions he's done over the years, if you're enough of a geek like me, I highly suggest that you do it because it's very educational. Anyway, Yahoo Finance had him on for just a brief little interview. It's less than 5 minutes. You can find it with a Google search, or of course, if you're a subscriber, you've already got it in your inbox. So there you go, and yet another reason to subscribe. Save having to do all that Googling looking for these things. But anyway, Mr. Altman talked about what's going on in the markets. He said that we've had an 8-year benign credit cycle. Okay, ever since the kind of the crest of the financial crisis, credit has continually gotten better. For the last 4 years, it's just been in unbelievable condition. Non-performing assets are extremely low. Delinquency rates are low. Charge-offs are low. Even in credit cards and subprime auto, it's just been a nirvana of credit conditions. It's been wonderful. He says that's long, maybe even too long. It's longer than he has observed in the past. And a benign credit cycle that's gone on this long could actually have a very ugly ending if anything happens to slow down personal wage growth, to tip us anywhere near a recession. This could have a very ugly ending. Now, Mr. Altman's been around a long time. More importantly, he's been right most of the time. He predicted what was going to happen in 2007. Now, he said we don't have the exaggerated factors of the mortgage bonds and falling real estate prices this time, but we still need to be aware that credit conditions are probably way overdue to take a turn south. So being a bank stock investor, of course, we watch that very closely, going through all the filings by the banks, the FDIC call reports. So far, we only see some signs in auto loans and some credit cards. Everything else is holding firm. We're watching it real close. When bankers start doing something stupid, it's time to sell all your bank stocks. They haven't yet, but they're bankers. They will eventually do something stupid. Hopefully we see it coming and get out in plenty of time like we did back in 2006 and 2007. The other interview that I saw was earlier this week, and it was a written interview with Advisor Perspective, and that's by Bob Rodriguez, who of course recently retired from the FPA funds after a very long career there, including 25 years running mutual funds. And he is the only guy that has been fund manager of the year for both his bond fund and his stock fund, and he outperformed the market managing both. That's an unprecedented, very impressive feat. During his 25 years at the head of the FPA Capital Fund, he actually returned over 14% a year, while the market turned in about a 10% a year performance. So substantial outperformance. Now, Mr. Rodriguez has always been something of a skeptic, but it's impossible, given his very strong positive returns, to slot him into the uber bear or doom and gloom crowd. He is, in fact, just a smart guy who keeps a weathered eye on conditions. He said in this interview that we are riding into something of a perfect storm. He's been a harsh critic of Fed policy ever since the credit crisis and leading up into the credit crisis. He's not been a fan of the way the Federal Reserve attempts to manage the economy. But he says now we have a lot of complicating factors. Monetary policy has disturbed markets. I don't think there's any denying that over the last 8 years, monetary and fiscal policy has definitely changed the face of the stock market. If you're not sure that that's true, take a look at the yield on the 10-year bond, the 90-day Treasury bill, and then take a look at the current earnings multiple in a very low growth environment of the S&P 500, or you could try it with the Russell 2000, but there's so many money losing companies, 25% of the companies in the index, it's really tough to figure out exactly what the multiple is for the Russell 2000 index. It's high, let's put it that way. And the real complicating factor here, according to Mr. Rodriguez, is something that I've talked about, and James Altucher, a good friend of mine, has talked about a lot in recent months. And that's what we call the ETF factor. Now you've got all these ETFs, they're taking in all this money because the song is great, right? Why pay a managed fee? Send the money to us, we'll put it in the index stocks, we're just barely going to charge you this little tiny bit of money. That's all true. If you look at Vanguard and BlackRock and what they're charging, I mean, they're charging 10 basis points and less to manage an S&P 500 index portfolio. Fees are important, so I do like that part of the song. Here's the problem. In the ETFs, there's no decision making. Okay, you buy or sell the stocks in the index based on the orders that have come into your fund complex during the day, based on the percentages that they're represented in the particular index. Now, let's say our good friend Vladimir Putin does something really stupid in the Middle East. It could happen. I might even give you that it's positive probabilities that it'll happen. But something happens to really shake up the market. Individual and institutional investors begin to panic. They want to raise cash. They start to sell. You send that order in to a managed fund. Now, he may be charging you more, but he's got the ability to look at the portfolio and say, okay, Exxon, got plenty of Exxon. It's really liquid. It's easy to sell. I can sell it without disturbing the market. I need to raise money, so I'm going to sell $10 million worth of Exxon. It's done in a second. Okay? He gets some discretion there. He can hold on to those smaller companies that he has in his portfolio and not be forced to sell them until the very end. We only come to the very end where that happens, and you see that sort of forced liquidation in a severe bear market. So he's got some discretion about how he manages that sell order and provides you your cash when you send your liquidation order. ETF managers got no choice. Whatever the representative percentage of the index a particular stock is, that's how much of it he has to sell. So you're going to be selling some relatively small companies out of all of these ETFs, and it's just going to overwhelm the price of these smaller stocks. It could be very similar to portfolio insurance in 1987, and this wonderful ETF that was supposed to make things safer and more profitable for you as an investor is actually going to make your life extraordinarily difficult and far less profitable. In fact, it'd be a pile-on effect with selling. Here's the other problem. All this money is flowing into ETFs. Okay, best new product, best new idea, going to save you money, make you richer, better looking, taller, all that good stuff that you're currently hearing from academia and from Wall Street. ETFs don't hold cash. Now, in the old days, you'd send an order in to your managed fund. They usually, they had a couple percentage points of cash laying around specifically to meet redemptions. A lot of hedge funds operate the same way, or they can take it out in the form of the margin loan, but they can get you your cash. ETFs don't have any cash. So when you get all these ETFs, and there's hundreds and hundreds of them now, representing different indexes, ideas, theories, themes, whatever you want to call them, we get a flood of orders into the exchange-traded funds to sell. My biggest question, and Mr. Rodriguez asked it, sell to who? About a third of all the money is currently in these products. It's growing every day. If they're all selling, who's buying? Me, eventually, but at much lower prices. I mean, as Seth Klarman once pointed out, the way to make really big money in the stock market is to be like Hetty Green and be the buyer of last resort. I'm willing to do that, but it's not at 25 times earnings as most of your S&P companies are currently trading at, and higher for some of your growth names. The price that buyers of last resort like Mr. Klarman, hopefully like myself, certainly like Andy Beal at Beal Bank down in Dallas, Texas, we're probably looking at single-digit multiples and huge discounts to asset value before we're willing to become involved on a broad basis. So, okay, guys, 26 times earnings on the S&P, single-digit multiples where the vulture type guys would be willing to get involved. You can see there's a big gap there. If we get that pile-on ETF effect, it is going to be 2008 style ugly. So forewarned is prepared. Hopefully, probably not, given most of the investing public's history. Let's be clear. Not predicting that this is going to happen tomorrow. I am saying that there's a very high probability that it's going to happen someday. We're 8 years into a bull market. Multiples are very high. It's extremely difficult to find new investable ideas. If you look at our bank stock buy list, you know, it's pretty short. Although I will tell you, subscribers, pay attention to that list this week, because 2 names fell back onto the buy list out of the portfolio stocks. They're banks that I've been waiting for some time. I'll follow up on that with you guys next week and send the tickers and names out to you. But you know, do a little legwork. Look at the list. There's a couple stocks that fell into that. They're at the top end of the buy range. Make sure you pick those up early this week and get them in your portfolio. Okay, so where are we next? Oh, God, the Circus in D.C. I try to stay apolitical in these videos. I'm not sure why I bother doing that. No matter what you say politically, there's somebody who disagrees with you, and they're going to attack you personally and say bad things about your family, because that's how we do politics today. I think that it's reached absurd levels. I think that all of the Congress people that I'm seeing on TV, and by the way, televised congressional hearings, if you're not watching a few of those, watch them, just so you can realize the caliber of moron that we have elected and sent to represent us, we the people in Washington, D.C. But this game is not about making America better. It's not about passing legislation that's going to have a meaningful, positive impact on people's lives. It's not been about passing tax reform or doing anything about the healthcare mess. And, you know, the Republicans brought out a horrible bill, but Obamacare was also a horrible bill. None of this is the answer, but this is all about scoring points for your team, okay? It's about doing things that move the Democratic Party or the Republican Party's platform, most of which is absurd on both sides, forward. It's us against them. There is no honorable, loyal opposition. It's a dogfight. It's a circus. There's no winners. The losers are absolutely we, the people. The mid-year elections are just a long way off. I do not plan to vote for anybody that represents or identifies with either of those parties. I'll vote for the dog first, because this has turned into a circus and a sideshow. It's horrible for the markets. It's certainly not good for the markets. And the inability to make any progress on meaningful bank legislation, bank reform legislation, and tax reform is actually continuing to hamper the small banks. Oddly, that's a bit of a plus for us. We own a lot of banks with a bit less than $1 billion in assets, and they're the ones that are coming to the market and saying, you know what, I'm tired of this. I hoped it was going to get better. I hoped we were going to, regulatory reformed. I hoped we were going to get tax reform, and that was going to allow us to move forward. It's not happening. Gonna have to go ahead and sell the bank. They're gonna sell it at a premium. I'm gonna make some money, but I don't, I wish we'd get the reform and these guys could just turn into little growth stocks, and that'd be acceptable as well. Consolidation continues no matter what, because we simply have too many banks. Okay, now, it is 4th of July week coming up. Holiday will be celebrated on Tuesday. We're going to get started here a little bit later today. We're going back over to the neighborhood, our old neighborhood, visit with our crazy neighbor. Fantastic guy. He's an airline pilot. Takes his job very seriously, works very hard, but when he's off, he's off. Okay, so we're gonna grill up a bunch of tasty animals. We're probably gonna drink some beer. Uber could get heavily involved on the way home here, and we're just kind of a grand old time. And I guarantee you, before the night is over, we will blow some stuff up, because you can buy fireworks down here in Florida relatively easily. And he lives on a lake, so we can just shoot it out over the lake and have a grand old time. Did the same thing last year, and it was just fantastic. Nice, beautiful home right on a lake, nice pool. Grill up some hamburgers and hot dogs and corn on the cob and whatever else we can find to get into, and celebrate the birth of what I still think is the greatest nation in the history of the world. We have our problems right now. We absolutely do. I'm not in love with what passes for government out of Washington, D.C. I am, however, still very much in love with the spirit and the intention of the founding fathers and so many of the people who helped build this country. As you guys know, I'm a huge fan of cracker westerns. I read them all the time, and they're basically just Pioneer Day stories, but they're set here in Florida. And I'm a big fan of westerns overall, by the way. It hasn't always been the case. It was actually Victor Niederhofer, the hedge fund manager and trader, who turned me on first to Monty Walsh by Jack Schaefer, which is one of the best books, I think, ever written, and all sorts of life lessons in that book. And then into the Louis L'Amour category, which I have read, I think, all of them. I might be missing one or two. And every few years I go back and reread the entire Sackett series, all 26 books. I have them on my Kindle. But if you look, when you read these westerns, and there's a certain spirit to the cowboy, okay? And he's very independent. He's driven. He wants to succeed. He lives up to his word. He completes his task. He protects his family. These are all core, traditional American values, and they go across all genders, all races, all political creeds. They're not generic to any subset of the population. They had a pioneering spirit. They wanted to build things. They wanted to make their lives better. And a lot of that is what drove the growth of the United States, from the 13 original colonies all the way out to our great West Coast states like California, Oregon, Washington, all beautiful places. So our politics are a mess right now. Cannot be any question about that. Don't care what side of the aisle you're on. If you look at this, it's a bit of a mess. We've always been able to fix these, and hopefully we will be able to again. But it's the spirit of the people of America that make this a holiday that's still worth celebrating. People who stand up for what they believe in, who work hard to make their families' lives better. I started to talk about the cracker westerns. I got totally derailed there. Anyway, the cracker westerns, if you never read one, read a couple. Patrick Smith's A Land Remembered is a fantastic one. That was just a great book. And I think about it when I'm driving through the more rural areas of Florida. When you look to either side, okay, there's swamps, there's, all sorts of plants with sharp edges and needles, and they're thick and they're dense. And then you've got the alligators and the snakes and the leopards and the bears. There were some brave folks that settled this land down here, folks, because they were doing all this in 95-degree heat. But I think that same spirit and same bravery is still alive in this country today, and we're celebrating. So crack open a few cold beers, throw some food on the grill, get some fireworks and blow some stuff up, and celebrate the 241st anniversary of the greatest nation in the history of the world. I certainly know I'm going to today. Tuesday, we probably won't go anywhere. We have, right down at the end of the street is Walt Disney World, and we can see their full fireworks display. So we'll probably just grill up some stuff here at home and watch that. But today we're going to go join the neighbors, have a little bit of fun. So, baseball. Orioles are playing break-even ball, folks, and that is just not enough in the American League East. So pitching is going to have to get a lot better. Last night we were leading Tampa Bay going into the ninth, 3-2. Gave up the run to tie it, and then of course gave up the mandatory 3-run homer in the 10th to lose the game. Can't do that, and expect to contend in the American League, and especially American League East. I'll never not be a diehard Orioles fan, but I have to admit that I have been staying up a little bit, much later than I should be some nights in the past couple of weeks, to watch the Los Angeles Dodgers play from the West Coast, because that is a fun baseball team to watch. They have fantastic hitting. They have Yasiel Puig, who may be the greatest bat flipper of all time. I mean, he did one the other night where the flip went all the way over to the dugout when he hit a home run. It's fantastic. He made a great catch the other night and kissed the ball and threw it into the stands. This guy is just so much fun to watch play baseball. Then we got Corey Bellinger, a 21-year-old kid, leading the National League in homers. You got Clayton Kershaw, who is, might as well stitch Koufax back across the back of that jersey. He's that good. That's solid pitching, great defense, leading the National League in home runs as a club. A lot of fun to watch that team play. Unfortunately, they play very late at night, and my wife gets really irked at me, but you got to pay a high price for great baseball, I'm afraid. So anyway, on the book front, reading the Sam Zell book a few weeks back got me really kind of on a bit of a nonfiction kick here. Finished the book on William Donovan, the founder of the OSS, and oh my goodness, is that a fantastic book. If you've never read it, as I said last week, buy it, read it, you'll thank me. Currently working on The New Tycoons, excellent book about the private equity industry and the leaders of the private equity industry. It's, for most of you who are not familiar with the industry, it's going to be a real educational experience. learning a different way of thinking about investing. And the personalities involved are in many cases larger than life. So it's a lot of fun to read. I'm enjoying it quite a bit. Just ordered a book that Manish Pabrai recommended on his Google Talk last week. We touched on that last week a little bit. By Eli Broad, called The Art of Being Unreasonable. Since I am frequently told that I am an unreasonable person, I might as well turn it into an art form. So I've just ordered that. I'm going to read it, pass that one down to my son, who also enjoys these kind of books. So I'll have a report for you on that probably next week. On the recreational reading side, we did just finish up the new Brad Thor book, the Scott Harvath series. Always a fantastic read. If you've never read those, they're fun. They're, the kind of the spy, James Bond sort of, although much more violent than James Bond type of books. And they're a good read. Great way to spend an afternoon or an evening. Okay, guys, it is a time to be cautious. Valuations are stretched. It's hard to find new names. Be careful. Stick to the buy list stocks. No need to go wandering off looking for moonshots. They're probably not out there right now. Stick to the buy list. The buy list did expand by a couple of key names that I want you to own this week. If you're not a subscriber, please don't email me to ask, because I'm not going to tell you. But subscribers, notice those two new names on the list and get those in your portfolio as early in the week as possible. And I'm going to put them in the blog here shortly so you know exactly which ones are there. Buy list got a little bit bigger. Stick to the buy list. You can buy the smaller bonus banks that I still have ranked as a buy. That's also in the blog. But build cash. Be careful. Caution is king until we see some sort of pricing improvement in this market. Anyway, went off on a couple of rants on this one. Really only did this video to check out and test my new microphone. Had plenty of complaints on the sound quality, including some from me. So I bought this microphone. I really feel like Chuck Thompson calling an Orioles game back in the old days. This thing is pretty cool looking. But anyway, we'll see how the sound quality worked out. Hopefully it's real good. And I will talk to you guys next week. Have a fantastic 4th of July, everybody. Get out there, eat, drink, and blow some stuff up. I'll talk to you next week.